Welcome to Credit Union channel. I'm Ranjit Charachi. Our today's session is about good governance in savings and credit cooperative. This topic is very essential for cooperative development and success of the cooperative and sustainability of the cooperative. We aware always financial standard of the savings and credit cooperative. It's a very important financial performance. When we look at the financial performance, where the root causes to in order to maintain the best financial performance is coming from the good governance. In generally, if the country is economy is very good and successful, I think there's one of the indicator for the good governance indicator. The country is a governance is a bad, so then poverty is increasing and corruption is increasing, and the more benefit is not goes to the majority of the people. So there is a direct linkage country development and the governance. In the same way, the savings and credit cooperative success and sustainability and financial performance has direct link with the governance. Before I go to the topic, let me give a little bit overview of the financial cooperative. So nearly around maybe 95,000 savings and credit cooperative around the world. I can clearly define there are two type of regulatory framework. Most of the developed countries savings and credit cooperative, the so-called credit union, are regulated and supervised and monitored under the main financial regulatory framework. Some country has no different. The banks and financial institution and credit unions are the similar regulatory framework, same standard. But some country under the same financial regulatory framework, but bit different level of the savings and credit cooperative. Uh, for example, Canada, I can take it, and the United States, and then we go to the even Brazil in the Latin American country, in Europe, almost every country, and Ireland, and come to the Asia, I can very clearly indicate it, Australia and Korea. Mongolia has a financial regulatory framework, not financial, but they are registered under the cooperative law. In Vietnam, also the regulators are State Bank of Vietnam. But other Asian country, almost they're Thailand or maybe go to the India, Nepal, Bangladesh, Malaysia, Indonesia is come under the financial cooperative regulator. But Laos is under the Laos. So I'm trying to look at governance. There are three levels of the governance. One is external governance, internal governance, and individual governance. But more important, governance is a standard and indicators and monitor. It has to be integrated. So now you are asking question, what is the difference? The cooperative is a value and principle, the way of the operating and how the benefits goes to the people. So it is in the foundation. I think every rules and regulations and structure, it is integrated to the our structure. Let's go to transparency is a kind of external, very important part, and compliance is a very important part of it, and public accountability is a part of external rules and regulations. When it's come to the transparency, when you look at it and go to the internal structure, continuity, balance, accountability, and individual. I will go one by one to explain. Okay. External transparency meaning we all aware norms, financial reporting system. We have every country has the financial accounting formal standards. So this is a very important. When you are reporting the finance, everybody need to understand what does it meaning. Portfolio, the loan portfolio is very clear. That means good loan which we have granted and account receivable. But if you insert under the loan portfolio, you have granted loan to the some companies, institution which is not under the regulator, because the cooperatives are very clearly mentioning you can provide the loan to the only your members, but there are a lot of the institution they financing their own companies set up. It's, I can see many, and they give the loan and they put under the loan portfolio, and the external auditor, I will talk later, has also not been. So this is a way, is not very transparency. When we say the board of directors travel cost, it has to be very clear, and the board meeting cost very clear, salary is very clear. So I think we need to have a very clear financial standard. So when we reporting, and also regular to inform to the members at least a key results area. It's not the member owned, member managed, member control, unless you disseminate it. I think if the credit union can put it to their key result area, portfolio, quality, and then non-earning asset and liquidity, I think there are key indicators can put it to their website accounting. Majority members are never seen the audit report of the financial cost. How say you are transferring? So with the standard. Now I will go to the cooperative rules and regulations in Asian country. Yes, they indicated the part of the legalization, but business operation they did not come up with any prudential standard. The pearls is one of the best practices, but most of the credit unions in Asian country regulator, I do not know why hesitate to tell this is the prudential standard you have to maintain. P is the portfolio at risk. How do you measuring your portfolio risk, and what is the date, and what is the provisions you have to do, and then your balance sheet and effective financial structure, what should be the proportionate asset and liability, what would be the savings percentage and a loan percentage, external investment and delinquency investment, liquidity investment, and asset quality asset is very clearly, and the asset okay, quality of asset, okay, another one A. So what is the non-earning asset ratios and the rate of return, and how did you make a profitability, and a pricing policy and liquidity position and sign up growth. It's very important, but lack. So I'm not sure that how, if you do not have a prudential standard enforced by the regulator, how do you ensure the good governance? Another one is external audit. External audit, most of the cooperative departments are doing. It's also they have to look at very clearly where the conflict of interest, grocery account, and legal compliance, and within has to do 90 days. So we see the many cooperatives who collapse and bankrupts. External auditor did not put the early warning to them. So it's not a financial failure. I put it that it's a governance failure. That is the reason they could not maintain. So I think auditors, and then the regulatory framework, of course, there has to be follow up. If not, the regulator has the power to enforce, and public accountability and a responsibility of the board directors. What's the responsibility, accountability? It's not only judge, but Australia we have a negligence and ignorance. This is very important. Abuses and misuses very clearly indicate what would be the legal aspect. So be sensitive that all the public accountability. The board of directors need to understand they are using the public money and a reputation risk. So a lot of the credit union has never gone through this real external governance part. So this internal governance is part of our internal regulation, rules and regulation, but it need to have a four level. One is a structural level, continuity, balance in the board, and accountability. So we go to the attendance of the general meeting. This is a very question. You please, if I'm wrong, and maybe you can highlight it. We have a 200,000 members, 150,000 members. Is there any representation structure, representation AGM? That some of the cooperative, what they're doing are 10,000 people are coming, only around few people are talking, and others people are going, really do not know. I think we have to structure modern AGM, maximum 500 members, have a business meeting. It's not political gathering. That has to be very clearly when the business is moving, our democratic structure can make it. And then the board of directors compositions, and the male and female, and number is a very important. It's a number, probably a 7 and 9 is the best. If you think that's not enough, it can go, but 11, 13, I think there should be a limit. And the maximum our term, this is very important to the board. The 2-year term is a very good primary level cooperative to the village level. But if you're going for the national level, okay, 3 years. Okay, if it is an apex body, I have no question to go term for the 3 years or little bit higher. But majority think, oh, parliament is a 5 years, or we should go parliament. I really think that is not correct answer. We'll go to that proper monitoring systems is very important to standardizing, no matter who is doing very clearly. Dialogue with the board, regular dialogue, and certain channel focus group, and activate a supervisory committee, account supervisory, and they should have about the policies approval, and then the board of directors involvement in decision making, and the conflict of interest, and then misuse of the funds, abuses. I think currently we do not go. There is a scope of work for the accounting supervisory committee. Continuity is to ensure that every cooperative need to have a strategic plan. It's very clearly it need to have a board of directors responsibility, even if they come to the 2 years or 3 years term. So their job is a continuity of the board, and they need to create a very good create a succession plan in the leadership. So that means if I am a chairman, it's my responsibility to ensure the right person is lining up. There should be an internal policy how the best leadership is coming. Democracy is not just selecting majority popularity person. We have to look the who is basic requirement to become a board of directors. So that is why we need to have a very clear filtering system to become. It does not mean elite people, even a rural grassroots level, to have a certain experience, competency is needed for to become a succession plan. Disaster management, every credit union need to have a type of their emergency arrangement, either flood or with the fire or disaster. But nowadays COVID-19 is a very difficult part. So this is the time government has enforced a moratorium, 3 months, 6 months, sometimes it goes to 1 year. That's only one side of the coins. They look for the only borrower side. So we need to understand what's happened to the depositors, those who need to withdraw their money during this difficult time. What will be the policy? I think that is why balancing policy, the saver and borrower. I think this is a very important board of directors, not simply blindly following whatever others, because we are not regulated by the central bank, and as if the central bank regulated, and there should be a kind of, the government is going to regulate, they need to justify how the borrowers can take the money back. The banks is very difficult. They have a different investors' money, so they are not moving. The board of directors also representation should be geographically different geographical locations. So I think this is how balance in the member size also very important. Around 5,000, 20,000. I think best way there should be a kind of membership balance also. I am not that much favor to having a large millions of members, 100,000 members. They are saying we are the biggest member. I think we need to look at how many members you improve the life. So we'll go to the accountability part. So what would be the board of directors accountability actions they have taken? Management also accountable for their action. The very clear the board make up policies, not the management. This is every board of directors meeting. They oversee of the last month operation and see whether new policies are required, and if everything is within the policy and they are actually endorsing an approval of the past performance. But nowadays, every single board of directors meeting, they want to take the decision approving the loan, granting the loan, buying the loan. I think once you set up the annual target, business plan, and you set up the budget, and then you have our policy framework how to play the game. So then board of directors are referees and watching whether people are playing as we agreed with the discipline. So that is a management is implementation, and all this accountability should be recorded properly. I will go to the most difficult part. So we have an external governance, which based on the external rules and regulation, and then we have an internal governance based on it. Now we got individual governance. I think this is a key area. We need to have that is why cooperative leaders have to have high quality of values driven people, no matter how much their knowledge, how much their skill, but if the people do not have a value driven, my observation, you should not select such a people to be in your organization as a board of directors, because I think this is a selection process. We need to have a code of conduct. So I think if you do not have that code of conduct, so you can approach and we will provide no criminal records and the board of directors and immediate family. This is a very good point. So a lot of the cooperative society board of directors, they use their power to entertain their family member, appointing the husband, wife. I have seen a lot of credit union. I am very much concerned the family cooperative. Maybe you are not happy with that, but you need to agree with this is a conflict of interest. No matter, you have a lot of arguments, say, oh, they are all family, they are running very well. At the same time, everybody get shocked. It's a family. Let them to put if they want, so that organized by a company by themselves, they can run with their own property. I'm not favor family business corporate society. It should be public. No matter how you are weak, I have ensured you have not given an opportunity other people to take the position. So that is why, and they should not serve that area, and a board and management relationship. So no delinquents of them. So is Australia has a very good document fit and proper. I think that also in Korea. So it's very important to follow fit and proper and filtering system, lining up system. And competency is also when you become a voluntary position, it doesn't mean we are not handling 100,000, 200,000, we are managing the millions of money. It's a people's money. Need skill, competency is skill. We need to understand the financial business is a more sophisticated business. So that is why the people need to have a understand what is the banking business, what is the members' point of view, basic financial literacy, product designing, product pricing, and ability to read and understand, motivating, and leadership, directing, communication skill. Quite large competency is required to become a competent for the board of directors. This part is a commitment for at least some time. So it's not necessary board of directors to come every day to work in the office, and then result oriented, always what result dissemination to our members, and the directors also respect the decision, not to look at the clicks. It's a very important kind of value. And then actively promote the policy of the cooperative society, and then also board need to work in the as a one voice. So again, I summarize what we explained about. So we can see now my say, external governance, good governance. This is a transparency, compliance, accountability, and internal structure, continuity, balance, and accountability, individual integrity and competence. Now you can see it has a real this here. Now you can safe institution, quality product and services, trustworthy. So good governance will ensure having a safe and sound financial institution. So this is that if the safe institution, if you are following, you will have a financial discipline and administrative control. So that will uncompromised financial strength and administrative control and standardized operation. Is very clearly all this we are talking about these things. So when it's come to here again, quality product and services, they're providing financial, this is a services and information, classify your members and understand. So this is all about the structure, continuity and accountability. So based on that, we so this is able to provide the information and able to develop the high quality product and service. Now we can see human resource management. The credit union should have a proper human resource management system. So that is why the integrity we talk about here, all this individual governance is come to here, our characteristic, and competency is also part of it, and compensation. So this is my summary. Let's put it this way: if the credit union not maintain good governance, it has a directly link with the financial performance. It is like a one coins of both sides. So that's what the regulator has a responsibility, enforcement, and also that internally and our internal control system to maintain properly. They are following the internal rules and regulation, and the people need to build the values and ethics, so that will maintain the individual governance. So this is my idea. So that promote the good governance in the cooperative to protect the good governance, ensure members money safe. So if you have any other idea and thought, please be free to share with me. I'm very happy to facilitate, and if you have any question, please drop to me some email. I will help you to make you understand. Thank you so much for listening. Please share this videos within your member network. So this my purpose is sharing our knowledge to ensure safe and sound financial cooperative in Asia. Thank you so much.